All right, Sean, welcome to the interview, man. Prop shop trader, one of the most anticipated or a prop shop I hear about from my community. And you guys have seemed to be off to a good start. And welcome. Thanks for coming on. I appreciate it.
Thanks, Kev. Appreciate being here.
Yeah, I'm really excited to do this with you and to learn more about you and prop shop trader. So let's get started. Let's go
Sure.
into your background. So, talk about your background. What made you want to start a prop firm? I think you own a couple other businesses as well. So,
Yeah.
yeah.
So technically, I'm the CEO of the NeuroStreet Group. So we're actually a portfolio of fintech companies in the trading space. We have education brands, software development companies. We built one of the largest marketplaces in the world on the back end of NinjaTrader over the past several years. And essentially, we did an acquisition and acquired TickBlaze, our trading platform, in 2023, because we knew we wanted to venture into expanding our ecosystem of companies into either proprietary trading or potentially the brokerage route in the future. So the most viable option for us was to have our own technology first, and then that basically was the springboard for us to be able to build out the proprietary trading arms of our companies and our portfolios. Yep.
Yeah, nice. I've seen TickBlaze. It looks really interesting, and we're gonna talk about a little bit later. But
Sure.
so for prop shot trader, let's talk about when did you start it? When did you create it? Core values, the funding and money backing behind it. Whatever you
Yeah.
talk about, let's.
Sure. Yeah. Great question. And so first, I just want to thank you for putting on these interviews. I know you've interviewed some of the other proprietary trading owners. Obviously, it's great to see you and other influencers putting the effort into working with companies like us. I know it's not always easy, but you took the bull by the horns. You reached out, and here we are. Right. So,
Yeah, thanks.
the first thing for us is when we wanted to build a proprietary trading firm, it really wasn't just about launching some company to try to make money. It was we have an ecosystem of companies, and we have a very large community of traders, one of the biggest in the space. And we've worked with pretty much every proprietary trading firm in the game when it comes to putting all of our students through prop firms, technology partners, etc. And when we wanted to build a prop firm, it was really because we wanted to create a closed loop circuit of the most viable option to put our traders into our own company ecosystems.
Okay.
And what that meant is that we had to build out big infrastructure. And a lot of things that we've done is very different in how we look at building prop. We actually started building the prop firm in 2023. We didn't just launch it until this year,
Okay.
but we spent a lot of time building it, and that was a very big part of our roadmap, was doing things right. That involved raising capital, bringing in strategic investors. That involved acquiring TickBlaze and having our own technology offering. That required bringing in legal counsel and regulatory counsel from different countries like Europe, Canada, United States. So our vision was to create a real prop firm, not just a trader funding industry, not just a trader funding company with sim to live process. Like, it really was about putting big capital behind traders. And I think that's why we deserve to be here. Yeah, we've
Yeah,
done it right, and we've really spent a lot of time to build it.
great. Okay, let's just get the first thing out of the big elephant in the room. 20
Sure.
accounts. How do you support 20 accounts, bro? Because like,
Yeah, well, it's actually quite mathematically sustainable when you understand your payout structure. What a lot of things well, first of all, let's start with why we decided to roll that out. First and foremost, sustainability is about solvency. A prop firm is in the business of providing capital to traders, not providing simulated accounts to traders. So what we do is we look at solvency based on how we pay out traders and how fast we move them into real prop. So our structure is we cap our payouts. We're very open about that. We have very strategic caps in place per account size. And we have mathematical models that we've built to be able to put traders into the sim accounts. And as soon as we see them to have enough skill, we move them right out of sim into live trading accounts. Yes. And so we cap our payouts because we can mathematically ascertain firm solvency on number of users. At any given time, we obviously know how many traders we have in the firm. how much our exposure to payouts are, and then how soon we'd move them to real prop based off their status and based off their performance. So a lot of the firms that went belly up, we don't need to go into any names, but one of the biggest questions is like, how does a firm sustain it? It really has to do with how their rules are structured and how their payouts are structured and how they've built that infrastructure around flagging and compliance and basically ensuring that the traders are able to actually stay within the firm. Yeah.
Right. Okay, that's great. Yeah, because people are they have PTSD from a couple of firms that they invested money with. They were expecting payouts, and
Yeah, and I'm glad you asked that question because a big part of our entire build out was mathematical structures around how we move traders into simulated payout accounts, how we move them out of simulated payout accounts into real brokerage accounts. And I believe that if a firm isn't capping their payouts, it's a very, very big risk, right? Like you got to remember, like the prop game is about putting traders into evaluations. Even though you're getting paid out in the trading accounts that are payout accounts, you're still being evaluated in the firm's eyes. Like as a prop firm owner, we're still evaluating traders even if we're paying you out in the simulated accounts, because the whole vision for us is to move you out of those accounts as soon as possible into live accounts, right? We don't really scale big traders in a simulator,
right.
right? And anybody thinks that that's the game has got it twisted.
Yeah. Okay. So just a quick question also, because like the firms that did go belly up, they were trying to rely on people buying accounts over and over again to pay people out.
Mm-hmm.
I saw your webinar, which was great. I think you mentioned that like you guys have your own separate pool of finances to
Yes.
pay people out, as opposed to relying on people blowing their accounts over and over again
Yeah.
and buying new ones, right?
Great question. There's two things that we need to discuss on that from a regulatory and legal perspective, and just from a pure ethics perspective. When we built the firm, our legal counsel made it very clear that if you're using just front end revenue to pay out back end fees, that's a Ponzi scheme, right?
Yeah.
And we've seen that in the My Forex funds lawsuits, and we've seen that in all the different stuff that even though they won the lawsuits and they did all that, there was still a lot of discussion in the industry around how do firms actually justifiably grow and scale a company on ethics and merit if all you're doing is selling evaluations and you're not actually scaling big traders.
Right.
So we knew that we didn't want to be in that same category. Even though we're in the same industry, we don't want to categorize ourselves in that same realm. So the first thing we did was structure the company so we could raise capital with big investors. And we raised millions of dollars, and we set up infrastructure in multiple countries for operations globally. And the goal is that we have infrastructure for simulation in the evaluation company, and we have infrastructure for real prop, and we have big capital set aside to scale big traders. And so the other side of it too is that when somebody buys an evaluation from us, they're not just buying an evaluation, they're buying the evaluation. They're buying access to TickBlaze platform. They're buying access to the education, the strategies, the algorithms, the indicators, the community that we provide in the infrastructure. So really the evaluations are 20% of that entire equation. The entire revenue that we're bringing into the business pays for the entire infrastructure that gets provided to traders.
Okay.
Because a lot of the prop firms out there don't have any infrastructure for education, software, community, nothing, right?
Yeah.
We provide that all as a turnkey solution when you come into the prop firm for us, because we have that infrastructure from a lot of our other companies.
Yeah. Okay. Great. Yeah. People are just worried because like there are people who trade full time with props and like they're literally relying on these payouts to
Sure.
bring food to the family. So thanks for explaining
100%.
that. So let's go into the
Good
prop.
question. So I think it's good that you're addressing that because it's a big part of our value structure. Yeah.
Yeah, I appreciate you answering as well. Let's go into the rules of your prop shop accounts. So I know they're called Warrior and Gladiator
Hmm.
accounts. I'm a big fan of the ancient Rome history.
Me too.
Yeah, I love Gladiator. I love Spartacus. So when I saw that, I was like, yes. All right. Anyways, but so evals are called Warrior Path accounts, right?
Yeah, the warriors are evaluations, right? So we put you into a warrior account if you feel you need to be evaluated. Obviously, we encourage newer traders to go into those accounts.
Yeah.
Anybody that is just getting started, not just even somebody with no skill or even with skill, you're using a technology, maybe you're using a different platform and you're coming in and using TickBlaze. Well, maybe you want to get evaluated. If you're somebody that's just getting started, obviously that's the best path forward, right? Evaluations are set to be there for us to at least see, can you actually hit a profit target, or can you manage a little bit of risk before we move you into a payout account? Yeah.
Yeah. So I think for these evals, there's only one goal, right? Just to make sure you hit your profit target,
That's
right?
it. And don't hit your drawdown. Yeah.
Yeah, you can hit it in 1 day or in 5 days, and we're in between, right?
You require 5 days of trading. We require 5 days of trading. It's a 5 days requirement on the evaluations. We're very big on that, and let me kind of touch base on this. I know other firms have different perspectives on, very, very short evaluation windows on the
Yeah,
evals. We've been advised against that from our counsel, just due to the fact that, from a pure regulatory perspective, how can you actually evaluate somebody in one day? You
right,
can't. You
right.
can't do it. Now, I'm not saying that other firms should or shouldn't do what they choose to do, and I'm not here to poke holes through models, but from an ethics perspective, you can't really say you're evaluating somebody within one day. The trading is a very, very difficult business.
Yeah,
You need at least a few days of data to be able to formulate a decision as to whether somebody should actually move into an account where you're paying them.
right.
Right. So that's our perspective on evals. It's a 5-day window. But at the end of the day, it really depends on if a trader wants to be evaluated or not, because we also have a direct payout account process.
Right. Okay. One thing I really like about your structure is that like you really do discourage people like, gambling and burning and trading accounts because
Mhm.
you can have 20 accounts, but you cannot buy 21 evals. You're capped at 20 accounts. You can have like 10 funded, you can only have 10 more evals. You can't stack
Exactly.
evals, right?
You cannot. You cannot
Yeah.
do that. And we cap your resets. We have cooling off periods for traders that are basically struggling, because obviously you know better than anyone. I mean, you've been in this game as well as the most of the traders. I mean, traders can be very emotional. They can blow accounts. They can keep resetting and keep purchasing, and that's great for a company that keeps making money off that failure. But at what point, right? And we're also toying on the laws of anti-gambling laws, like on a lot of the state laws in the United States and different countries. Like different states have different laws around gambling policies. So when we built out the actual company infrastructure to try to be as compliant and as regulatory sound as possible, we had to put procedures in place and safeguards to protect the trader against themselves,
Yeah.
because obviously they get excited about making money, but they don't realize that they're spending tons and tons of money failing, and there has to be a cooling off period, and we have a lot of that built into the system. Yeah.
Yeah. I think the fact they allowed I think it's 10 resets per account per month. I think that's great.
Yes. And it's still
Uh,
large in my opinion. I mean, I've been trading for 15 years, and we try not to be too restrictive, but I mean, that's a lot of resets.
yeah. There are times when I'm until I reset 10 in like an hour, dude. So I'm glad you put
Well,
that.
I hope that you're not trading with us on those 10, because we'd tell you to cool down.
Yeah. All right. Okay. So once they pass, they pay a fee, an activation fee. That
Yeah.
depends on the tier they have for the drawdown customization.
One-time activation fee. Yeah.
Yeah. Okay. Cool.
Yeah.
Um, and is there an activity rule for evals? Like if they don't trade an eval for like a week?
Nope.
Okay.
No, we have an inactivity rule for like months, because obviously, if you buy an account, it's just sitting there for months. What's the point of paying for the data feeds? Like, it doesn't make any
Yeah.
sense, right? So it's obviously we'll reach out to you, say, hey, are you trading or not? And we'll just shut that down. But that's months after. Yeah.
Okay. I got it.
Yeah.
Okay. So let's move forward to the funded accounts, the Gladiator path accounts. So these are called PTSA, right? A paid trading sim account.
Yes, it is.
Okay.
Yep.
And all these accounts, I think you're a lot more unique and a lot more trader friendly because people can get paid weekly.
Yes.
And I think you require only 3 days of trading
3 days of pay. Yep. 3 days.
3 days of trading and minimum and 40% consistency. And you get paid literally every week, right?
Yes.
On each account. So 20 accounts times that's 20 times per week.
Yes.
So,
So a couple things with the direct payout accounts. I think it's very important that I don't call it funding, because, once again, I'm very big on legal and very big on regulatory wording. We're not actually funding traders, right? Like, if you think about it, like it's interesting is that like traders are not getting funded in a sim account. They're getting paid in a sim account. We're not
yeah,
actually putting capital behind you in an evaluation. We're not putting capital behind you in a simulator, right? You're getting paid to trade a simulator, to get paid as a prop trader. And once we evaluate you in those PTSA accounts, we'll move you into real brokerage accounts. Okay.
yeah,
So in the industry, they call it trader funding. I'll keep going back to our council, which we have some of the best in the world. We don't call it trader funding, because it's the wrong way to look at the business. We're in the prop game. We're a real prop firm, and we basically pay traders to be evaluated and pay them out in the evaluation accounts on the PTSAs. Now, what we do is we need 3 days out of the 5. I mean, there has to be enough data on a 3-day window to be able to qualify for a payout.
yeah,
Our 40% rule on consistency is ultimately liberal. I mean, there are other firms that have 20, 25, 30, 35, but we try not to put too much restriction on that. I mean, obviously, consistency rules can be very, very restrictive, and there has to be some form of give and take from a firm to a trader's perspective on being able to maintain that data accuracy. Yeah.
Yeah, I think 40% is more than generous. I mean,
Yes, it is.
most programs offer, direct to funding is 20%. So
Yes. Yes.
that's great. One thing I want to talk about also is the trailing drawdown. So like I think what makes you guys unique is that you allow your customer, your traders to customize your trading drawdown, right? So like on a 100K account, you can have 5,000 drawdown. I think it's 5,500 and then 6,000, right? You just got to pay a little more extra for each tier. And I've seen these prices like they're cheap, like compared to what you get out of them. Like I have 20 Gladiator accounts and I bought 6,000 on 100Ks. I did it without even thinking. I'm like, dude, this is a no-brainer. So I think you did a great job in that plan. So kudos to you on
With
that.
us building the model, it really boils down to understanding the breakage that we've seen in some of the other models built by other firms. And, like I said, I want to just point out that there's a lot of great firms out there that do really great work. They're hardworking. They've got teams. They've got great tech, and everybody's got their own focus and everybody has their own business model. But one of the things that we seen that we didn't really agree on in this space was the profit to drawdown ratios were not really ideal for traders, right? Like everybody was forced into a bucket of like 50K accounts.
Yeah,
And that's because the profit to drawdown ratio was more favorable in the smaller accounts.
yeah,
But that doesn't really make sense to me from a perspective of putting really good traders into larger accounts. Like if you're a really good trader and you want to trade bigger account sizes with bigger size, like you shouldn't have to be penalized because you want to move to a bigger account, in my opinion, right? Like you
yeah,
should have the ability to have an equal status quo. And so what we decided to do was we built a model that allowed a trader to choose if they want to move up that ladder on bigger accounts or even increase the buffer on their drawdowns. At least you can pay a very, very small fee to increase your drawdown limits to have an equal 1-to-1 payoff ratio to drawdown ratio. I mean, if you look at the 50K account and you go up to the 500K account, you have the ability to trade a 1-to-1 profit to drawdown ratio, which is something very unique to us, and I do believe that it is very attractive to a lot of good traders. Yes.
yeah. I think it's a no-brainer. Like whoever even considering it, just get it. It's worth it. That's not my question.
Mhm.
All right, so moving on. Let's talk about more rules in the Gladiator accounts. So I'm looking at an image you posted on the webinar. So I know there's some things that you guys are gonna flag, like if
Yes.
you size your positions erratically, like maybe trade like one lot one day, then 10 the next day. That's a little weird, right? So you're gonna flag that probably. Gambling, if you just go full pro before news, I mean it's kind of like gambling, right? You don't allow hedging, which no firm does. That's great. You cannot do hyperactive trading, HFT. But one thing I'll ask you about is flipping days. What do you mean by flipping days on your, if you get flagged for flipping? What does that mean?
Well, there's different types of flags. So let me just kind of talk a little bit about the discussions around flagging. So one of the reasons why we took so long to build the company was the flagging system.
Yeah.
So one of the things we realize in this space is that there's a lot of retroactive rule changes and traders getting denied payouts, and
Oh, hell yeah.
this is one of the things that have caused a lot of jaded mentality in the space. And so
Yeah.
as one of the builders of the team, and just a shout out to my team. I mean, my sister Ashley, Pranay, Jim, everybody that spent years building the business with everybody. We got a team of 20 on the back end developers. Like we spent a year building the infrastructure around flagging. And the reason we did this is because we've never seen it where traders could make a mistake that day and then get contacted on those mistakes that day so that they could help fix them. And think about this, like if you're a prop firm and you actually care about finding good talent, curating that talent, and then moving them into big capital, you'd think that you would want to build a system that proactively helps the trader become better, right?
Right.
You would think, right?
Right. Yeah.
Well, that unfortunately that is not the truth in the industry. And so we wanted to be a voice of change on this. And that meant identifying the things that would be an issue for us as a firm.
Mhm.
So erratic sizing is one of them, right? We consider that gambling. So that's the gambling flags. The We look at HFT flags, hedging flags, churning flags. We look at just all of the different infrastructures that are part of our flagging system. And what it is it's designed to let you know if you're compliant or not that day. And the reason this is so valuable is that you don't have to wait till you request a payout to be told, oh, you made a mistake.
That's what I was going to ask you next. Yeah, a lot of firms, you don't know what happened until you get denied.
And and this is why firms get a bad rap. And this is why traders are so jaded around reputation. And I mean, I don't blame you. I mean, we've seen it. I mean, I've had traders in our community been denied payouts from other partners and other companies. And I'm just like, how do we fix this? How do we make something better? How do we do something different? And what's nice is that even if you get a flag, that doesn't mean you won't get paid out. It just means you got to contact our team, hit the appeal button, send an email in, and just communicate with us. Because sometimes I'll give you an example. Let's say you get tripped for gambling. Maybe you didn't pay attention to your sizing limits, or you didn't do anything. That doesn't mean you're a bad trader. It just means you maybe didn't pay attention to something, or maybe it could have been a bug in the system. Like we've had situations where, I mean, we've had a software glitch and we have to unflag an account because something was wrong on the system. I mean, we're not here to work against the traders. We're here to basically work with our traders to make sure that they become really, really great, because our real prop arm is very different than other companies. So our whole vision is to move traders into real prop and scale them big. And in order to do that, we need to make sure that our traders have a handle on how they trade. And so, I mean, hedging is different. I mean, it's illegal. You know,
Yeah.
anybody that's, flipping, and you ask about flipping, it's like, when you just go in and out of a trade just to basically hit one day of trading, we'll be able to detect that.
Yeah.
Like a lot of traders will trade for 2 days and they just enter and close a trade on one day to get the third trading day. And, we will be able to detect that. Yeah.
Okay, I got it. So I
Yeah.
also saw that you guys have a clear appeal process, right? So and your
Yeah.
dashboard's great. Like you literally can see if you're eligible for a payout. But if you
Yes.
break a rule, you can appeal, right? And like you'll get a dashboard notification, I think. Is that
Yes. Yeah, and you'll also be told in email, hey, contact our compliance team, and
yeah.
here's what you need to submit to appeal it, and then they'll reach out to you, and they'll either keep the flag or remove the flag. And what's unique is that, just because you get a flag doesn't mean you're not getting paid out. You've got multiple days to communicate with our team on that.
Yeah.
It's a big part of our system. It's a big part of our operations, and we did that on purpose because what we're seeing now, and I'm actually glad we're seeing this across a lot of other companies, is they're starting to build these types of systems because they had no way of seeing that in advance. And
Yeah.
we've been privileged to basically be building on the side, watching some of the other firms operate. And to our advantage, we watch the good things that happen, and we also watch the bad things that happen. And we were able to learn from the bad and build better infrastructure to support a much better business. Yeah.
Okay, cool. Yeah, and I think from webinar, yeah, sorry, I think it was around a 48-hour window from
Yeah.
appealment to decision, right?
Well, you got to be quick. I mean, you only got 5 days. I mean, you're getting paid weekly, right? So you have to have enough time to communicate with the team, right?
Yeah.
48 hours is 2 days out of the five, right? I mean, it's a pretty big time. Yeah.
Yeah, of course. I would do it right away. I'll do it the same minute. But
Yeah.
yeah, okay, so DCA allowed, right? No
Yeah,
issue.
100%. I mean, I'm a trader myself. I leg into positions. I mean,
Okay.
we're not going to stop you from trading the way you want to trade, as
Okay.
long as it's compliant and we can scale you in real prop.
Okay.
That's the way we look at this, right? Because think about this, as a real prop firm, and we move you out of simulators into live capital. The vision is for us to put big money behind you. And if we can't do that, we can't scale that, we can't work with you as a trader, as a company. It doesn't know whether you're trading news, algos, dollar cost averaging. That doesn't mean anything to me. That's just a bunch of hocus pocus that firms will change rules and stuff to try to whatever. It's none of
Yeah.
my business what they do. But what I can tell you right now is if you're a good trader and you're a news trader, great. If you're an algo trader, great. If you leg into levels and you can manage risk, who are we to tell you you can't?
Nice. So DCA is cool, news is cool, algo is cool. Uh,
100%.
3 days per week, consistency 40%, super
Yes.
generous.
Super easy.
If they go with 40%, they just gotta make more profits, right? To satisfy 40%.
Yeah, well, no, what it is that 40% consistency means that you can have a slightly bigger day during the week, right? I mean, you got to remember the way that consistency rules work is if you go over 40%, right? That's because you've gone too much in one day.
Yeah.
So the lower the number, the harder it is for a trader to be consistent every single day. By
Yeah.
making it 40, we give you a little bit of a bigger day. You could have a bigger day during the week, and you can use that towards your 5 days, which is, to me, I mean, you don't want to penalize a trader for having a really great day, right? But
Yeah.
I mean, we don't want it to be the outlier, right?
Right.
Mhm.
Okay, cool. One thing I think is more unique to you guys is called this carry forward rule.
Yeah,
Can you talk about that a little bit?
100%. And this is a big part of our infrastructure. And some people would say, well, why do you want to share this to the open? It's part of your intellectual property. And I hope other firms adopt some of these types of practices because it would be better for everybody. If you think about this, right, like you asked a question, how can you sustain lots of accounts? Well, we cap our payouts. Well, if we're capping our payouts, that means you could make $5,000 in a week, but you can only take out $1,250, right? I'll give you an example. Let's say you're trading a 50K account, right? Right? The payout cap's $1,250 on that, right? You could make $5,000 in a week, but you're only allowed to take out $1,250 of that regardless, right?
Right. Right.
So that other delta of like 3,500 or 3,750, what do you do with it? Is it just wasted? Right? We sit there and say, listen, you can carry forward some of that into the next week. You can use some of the past week's leftover balance into next week's trading profits, right? And we still require you to make some of your money the next week so that we know that you're not just relying on last week's trading activity to get next week's payouts. And we allow you to roll the prior week's infrastructure into the current trading environment so that it becomes like you're not wasting your energy from the prior trading activity.
Yeah.
And this took a lot of time to build. The mathematics around it and the sustainability around it is all part of our payout structure, but it's a lot to do with why we built the capping system in the first place.
Yeah. Yeah. I think it's a
Yeah.
good system. Like, yeah, like I think things like this will definitely keep you like long-term sustainable, which is what everyone wants. Like if you win, we all win, right? Because traders can win by getting another partner to trade with long-term. You win by
Yeah, like let's say you have a great week this week, right? And maybe next week you're a little bit more skittish. The conditions are changing. You don't have to sit there on your hands and be like, okay, I can't trade this week. No, you can carry forward some of last week's balance, and then you can trade maybe less size this week, and you don't need to make so much money this week and to get paid again.
yeah.
And the whole goal is that you can't force everybody into a square all the time as a trader. The markets are changing every single day, right? So what happened yesterday and last week may not be next week's conditions. And maybe a trader changes the way they approach the market from an aggressive stance or conservative stance. We don't want to make it hard on you to get paid every week, but we need to have it consistently and we need to cap our payouts,
Yeah.
right? Because sustainability is at the forefront of our infrastructure.
Right. Okay, great. That makes sense. One more thing I wanted to ask you about is contract consistency. So I know on the dashboard, I think they calculate the average of the first 2 days you're trading, right, in a Gladiator account, and then that's
Yeah.
like you have like a safe limit and like a not safe limit.
Yeah, your base limit, your baseline. This is your baseline for the flaggings of gambling. Yes.
Yeah. So like if I trade, let's say if I have a 100K account, I trade 3 lots up to 6 on both days. That means my safe zone is 6 lots, right?
So the way it works is great question. So the way that we look at sizing, so this is actually a very, very important discussion because it's one of the most primary rules around flagging.
Yeah.
It's the gambling flag. And gambling has to do with over leveraging, right?
That's
So
what,
how
that's
do
what I
you
was
over
gonna say. Yeah.
how do you over leverage? Well, you trade too much size, right? So what we do is we don't know the type of trader you are. If you came into the firm today and you put on a couple trades, we have no data for you. And we're really big on data. So we have no data for you. We have no way to ascertain your sizing behavior, your speed of trade, how many trades you take a day, et cetera. But when it comes to position sizing, we need to form a baseline to get your average contract size. And here's the thing is it may be different for every market. You might be a NASDAQ trader and then a gold trader and then a euro trader or whatever you're trading. And what we do is we formulate a baseline over a 2-year rolling period. And we take your baseline and say, okay, let's say your baseline is 5 contracts, right? We have a multiplier based on the size of your account. So if you're in a 50K account, you'll have a certain type of a multiplier. If you're trading a 100K account or even a 500K balance, the multiplier will be different relative to the size of your account.
Yeah.
And so what'll happen is that we'll tell you what we encourage traders to do is when they log in the morning and they get ready to trade, don't just place a trade. Go into the members area and take a look at what your safe limit is. Don't go over that or you're going to trip flags.
Okay.
We tell you do not trade above these contract sizes
Okay.
because right now, let's say you've been trading 5 contracts for the last 2 days. So your baseline is 5.
Yeah.
And then we give you a safe limit of, let's say, 10. So that means you could go up to 10 contracts without getting flagged for gambling. But you go over that, we're going to be like, hey, why are you going in so much size? Like you've only been trading 5 contracts for the last couple of days.
Yeah.
Now you've doubled your size. Now you're starting to go over like what's going on. We're gonna reach out to you on a flag and we're gonna say, hey, Kevin, what's going on? Right. So it's really there to protect the traders. And you could literally, the way you could basically start to size up would be is like if you know your baseline is 5, You could go in with maybe 7 the next day, and then you could go in with 9 the next day, and you can gradually increase your size, which will gradually increase your baseline. And that's how you get a trader going from 1 lots to 2 lots to 3 lots, not going from 1 to 10.
Right.
Right. It's sizing up and earn the right to size up. Don't just go in with 5 and then go in with 50. Right. And that's why we've built the system, is because I've always been an advocate of, earn the right to scale up. And then, that should be done over a time period, not just on a minute by minute basis.
Right. Yeah. My next question was, how do you scale up? So you basically you scale up slowly, right? Over time.
And that's any trader is going to tell you that that's the right way to manage risk. I mean,
Yeah.
and we give you a big enough buffer on your safe limit. You could scale up quite quickly over a 1 to 2 day period. Just don't trip the limits.
Yeah.
And we tell you the limits, so there's no reason why you should ever trip those flags.
Yeah. Right. Okay, cool. Great.
Yeah.
As far as microscoping, do you guys have the rule where, like, do you have like a minimum time holding period or
Yeah. So if you go micro scalping is one thing, but there's a big difference between micro scalping and high frequency trading.
yeah,
Right. Like, like HFTs, or you got your fingers on the buttons and you're buy, sell, buy, sell, buy, sell, buy, sell. Right. Like that's the difference between somebody that's buying, selling, right? Buying, getting in for a couple of ticks, then selling, right? Because you could be scalping a highly liquid market like the S&P, and you might be only trading for 2 to 4 ticks. Nothing wrong with that, right? A lot of traders can scalp order flow on a 4-tick range bar for the S&P and do quite well, right? So who are we to tell you can't scalp? But there is a flag for HFT trading, and we will track the average duration of your trade. And we have a certain amount of trades that you are allowed to do that in before we track you as an HFT trader. Yeah.
Okay. Got it.
All of that's explained very clearly in the flagging documents in the members area. It's also on our FAQs. Yeah.
Yeah. Okay, great. Inactivity rule and funded, same as eval, right? Just if you're inactive for longer than normal, you'll get reached out to, and then
we don't really have an inactivity rule. We don't keep accounts active for a period of months without activity because we have to pay the data feeds on that, and there's no point.
Yeah. Okay, cool. One thing I want to touch upon is retroactive rules. So, these new firms coming out, they promise you the world, they give you these easy rules, easy payout structures, and then 2 months later they go back on the word and they make retroactive rules, and everyone gets pissed.
Sure.
So you're a newer firm. Can you talk about your thoughts on this? Like, what are you and your team doing to ensure that you guys will not have to, do this kind of practice where you're going to have to introduce retroactive rules to your system?
So let's start with just business in general, never mind prop firms, right? I don't know a company in the world that's ever started and never had to learn things as they grow as a company.
Right.
That doesn't mean that it's right or wrong. It's just that's business, right? You don't sometimes plan for things and then you don't see things through. The problem, though, is that in the prop game is that can drastically be catastrophic, right? Like, there's one thing if you own a restaurant, you don't plan for certain people eating food. That's different. If you were on a prop firm and you're in the business of giving money to people and you didn't think through your model, that's a problem. That's a problem. Right. So the way we do it is, first of all, like any firms out there that have had to make rules changes, I'm not here to say they're doing anything right or wrong. They know their business, and unfortunately things have to happen the way that they got to do things. And that's going to be up to them. And that's going to be up to the traders to decide if that's where they want to stay.
Yeah.
For me, the way we handle that is we spend a lot of time basically building out scenarios on what could happen, what could this happen. We have certain KPI metrics that we track in the business. We call them key performance indicators, where we're looking at major inflection points in the data. And that has a lot to do with number of users, number of accounts, failure rates, success rates, payout ratios, how long it takes a trader to get paid out, how long it takes for them to move to live, right? All of these different things are all about data. And we have a data analyst in the company. We have head of compliance, head of risk. Big part of what we do, and I can only speak from our perspective, is that the way we handle it is by properly understanding the mathematics around our business.
Right.
Because prop firm trading is a business of math.
Yeah.
It's not a business of software.
Mm-hmm.
It's a business of math. And one of the things that we are very good at is mathematical structuring. I'm I can say this is that one of the things that we spent a lot of time is the very first year of building out the company was not the websites and the software and the flagging systems. It was bringing in risk managers who manage a very large amounts of real capital in the real world, who manage hedge fund risk management in the options markets on Bloomberg terminals. I have a data analyst that works with hedge funds and family offices. And a big part of our infrastructure was, how do we protect the company? How do we protect the solvency? How do we forecast this? How do we model that? How do we build rules around this and this and this? So that way we can plan things in advance.
Yeah.
And that's how we intend and how we will honor our infrastructure. And that's why we built the flagging system, is because we have the ability to be able to do things proactively.
Okay.
Yeah.
Okay. Awesome.
And my heart goes out to a lot of traders that were affected by companies that have changed their rules. I think a lot of things could be done differently with a lot of companies if they do implement systems that can allow traders to understand when they break rules, because, you know, denying payouts don't have to happen if you're communicating with your traders and you're building good traders.
Right. Okay, cool. Let's move on to the biggest part I think about your firm, which is path to prop, the
Yes.
live program. So this is the end goal, right? Of course, for a trader in your company, because this is when they trade the live markets. You'll back them with real money. They can move over. I think they can move over. Like I think a big portion of their sim accounts, right? Sim balance, and then you'll scale them up. So, and these are
So
all live prop accounts, correct?
yes, yeah. So let me just kind of give you my thoughts on some of this side of things, because this is what makes us, I think, a lot different. Something we're very proud of, and I think it's, you know, if you're going to be a trader and you're going to work for a proprietary trading firm, what does that even mean? Right? Like you know, there's a lot of there's a lot of websites out there that call themselves a prop firm, but they're not a prop firm,
Yeah.
right? And so what is a prop firm, right? So, you know, go back to my lawyers and go back to my counsel, is that, you know, the traditional prop industry came from the equities markets. The SEC regulates the equities markets, right? And when we met with our counsel, we were, well, on, you know, the reality is that, you know, we looked at what happens if regulators come, what happens if things change, what happens if there's changes implemented across the entire industry, and everybody has to adapt to these things. And one of the things that kept coming around full circle is that, well, real prop, traditional prop's been around for the ages, and it ain't going anywhere.
Yeah.
And what does that even look like? Well, there's a big difference between called sim to live, moving traders to a funded account, versus actually calling yourself a real prop firm. And
Yeah.
the big difference is whether or not you're pledging small balances or enough to cover the day trading margins in a firm.
Yeah.
Because if you think about it as a futures prop firm, in futures, if you have a sizing limit on an account,
Yeah.
okay, and you're only allowed to trade 10 contracts, if somebody gets moved to a live account and you say, oh, we're going to move you to live, right? Now, this isn't our firm, but I'm just going to use this as an example. If you get moved to live accounts, and say you're allowed, your max size is 10 contracts. Well, if you're trading the indices, that's $500 per contract day trading margin. You only need to pledge $5,000 on that account.
Yeah.
That's not real prop in the eyes of what we call regulatory counsel. And real prop is where you pledge large balances to a trader. When they come in with some capital, you come in with more capital, you put that into the pool, and they're trading big accounts. That's real prop firms.
Right.
And so that's what we spent so much time building. In fact, that's why we raised capital, was because we knew that we needed to have infrastructure in place for all of this before we went live, because we didn't want to just rely on revenue coming into the business to pay out traders. And we also needed to have capital and escrow to back the traders when we move them into big capital. And so what we do is we pledge a multiple based off of the trading balances that are owed to the trader. And it's very, very simple. Not every trader wants to move to real prop. And I'll explain why. Because in this industry, what most people have gotten accustomed to is trading with trade copiers,
Yeah.
right? You and I both know that that's
Exactly.
where a lot of traders make a lot of money.
Yep.
And there's nothing wrong with that. And we're a big advocate of trade copiers, because we believe that you can size down, scale over more accounts, you can trade a little bit more reasonable, but it's also not real trading in live brokerage accounts. Like
Right.
if you look at traditional prop firms and real capital at the FCMs, you're really only allowed anywhere between 1 to 3, maybe a little bit more accounts, because ultimately the regulation on real prop firms are, you're not allowed to trade 20 brokerage accounts. Like that's not allowed, right?
Yeah.
And so what happens though is, if let's say you're a trader and you're trading 10 accounts in a simulator and you're getting evaluated, you're getting paid out, what ends up happening is that you're used to making your payouts. And then when a firm moves you to live capital, if they're only able to trade a small balance, well, nobody's going to ever want to move to live.
Yeah.
Like, why would anyone want to give out all of that capital every week trading in simulators on trade copiers? And then the prop firm calls them up. They're like, well, I could make more on simulators, and that's not the business.
Yeah.
So what we do, and this is something that we're very, very open about, is that we actually will let you know, hey, you're too good to be in sim. And we're open about it. And we're going to say, we're going to move you into real prop. You have a choice to make, right? Do you want to stay and trade with us in the real prop side? Or do you want to take what's owed to you in your payouts and go? Because we'll pay you out and you can go, right? And if a trader says, yes, I'd like to trade with you in real prop, then what we'll do is we'll say, okay, well, here's what you can do. You can stay in a Gladiator account for another week or two, or whatever time we discuss with you as a trader, and you can build a buffer. And what that means is you can trade for more periods of time. And what you build into the account will be your contribution over to live capital. So instead of us paying you out 20, 30, 40 grand or whatever you've built into your Gladiator accounts, you can say, yes, I want to come into real prop. You'll transfer that over. We'll put that into a live account, but we'll also pledge you up to a 1.5 multiple greater than that. So let's say you're trading a big account, 500K balance. Let's just say you're trading a big boy account, right? And you build up a 50 to 100K buffer in your account. We'll pledge a 1.5 multiple on top of that. You could be trading a $250,000 account when you come over.
Ooh, nice.
But that's the potential of real prop. And we have that set up in that infrastructure set up to be able to do that. But ultimately, we will call traders up sooner. We will not let you stay in Gladiator longer than you need to be because our goal is to scale you. Yeah.
Right. Yeah. I think I saw in your webinar, like you're called prop shop trader because the whole goal is to mimic create a real prop shop, right?
Yes, that's exactly what it was. And we provide both, right? We are very, very similar to the existing industry on the simulated side of the evaluation side. But when it comes to real prop, that's really what separates us. Yeah.
Yeah.
And we have relationships with FCMs and we've built risk infrastructure into our back end to do this. Yes.
Cool. So as far as moving from a Gladiator into a prop account, there's no set timeline, there's no set dollar amount cap. It's
No,
on your
it
metric.
really is. It really is on your stats. Like we'll call you up as soon as 2 weeks. If we see you, if you're a great trader and we can see your trading stats on a daily basis and we're like, okay, this guy's good. Like he doesn't need to stay here. We could bring you up in as little as 2 to 3 weeks. 4 weeks, 6 weeks, 8 weeks. It really depends on the trader. There's no maximum time in Gladiator. We have a 12-week threshold where we're actively very engaged in what you're doing. But let me explain something is that if you're getting a payout and then you're getting consistent payouts, we're going to be looking at that data like a hawk because at the end of the day, we want to move you into bigger counts because we can scale beside you and work with you at the master level, right? So for us, it really is, there's normally 2 to 3 weeks would be the minimum. We need to at least see a consecutive couple of weeks of payouts before we say, okay, this guy deserves to be in the real side.
Yeah.
But like, let's say you're somebody that just takes things slow, right? And it takes a bit of time. And maybe you're someone that goes like this for a while before you get your bearings and you start to ramp up. I mean, there's no limitation. Yeah. Once you're in the Gladiator, you're in the Gladiator as long as we keep you there until we bring you into real prop or we tell you to go.
Okay, I got it.
Yeah.
And let's see here. So you can have 20 accounts in Sim, but in prop counts you have one big live account, right?
Or we can split it into a couple, right? Like, let's say what would happen
really?
is
Okay.
like, it really is dependent on the brokers at that point because that you only can have so many sub accounts for each strategy. And normally from a legal and a regulatory perspective, when you create sub accounts in a brokerage firm, in an FCM, right? You can't create multiple accounts for the same strategies. Like it has to be for the purpose of different strategies. So normally we'll ask a trader, are you more comfortable trading a larger account or maybe 2 medium-sized accounts, right? Just depends on what the trader wants to do, right? But we'll work with every trader is a little bit different. So we'll always do what's best from a regulatory perspective and a legal perspective with the brokers.
Yeah.
But at the end of the day, yeah, you're not moving from 20 and bringing over 20. We'll take your balances from those 20 simulated accounts and put that towards your big transition, but you're not gonna be trading 20 accounts. Yeah.
Right. Okay. So one or 2 or 3 or whatever, like it's
maximum 3, maybe. Yeah. Maximum 3. Yeah.
okay. That's good enough in my opinion. So I also saw in your webinar that if a trader in prop live if they do really well, you will review them quarterly and then you'll scale them up even more, correct?
Yes, big time. Yeah. So this is where it gets fun for us on the risk side is that we do it like an institution, right? If you work with an institutional prop firm, like big institutions, like they have what they call quarterly reviews and quotas, right? If you work for a hedge fund and you have like 20 traders on your desk, like you normally have quarterly bonuses, you have quotas to hit, right? So what we do is we will put you in the accounts and we will basically give you objectives to communicate with us on a daily and a weekly basis. We have risk reviews whenever the traders need it. Like if a trader just needs a mental check-in, or if they want to communicate on what's going on, or maybe they want to start, doing a little bit more aggressive trading or dial things back. I mean, we at that point, we're always communicating with the traders. But the key here is that, every 3 months, we'll sit down with a trader. And what we'll do is we'll basically say, okay, like you've done X and you've done very well. We're going to scale you. We're going to add more capital. Are you able to trade that capital? Are you mentally able to adapt to that? Like you can't just double somebody's account balance in a day and say, hey, here you go and trade double. Like there has to be a conversation between both the trader and the firm to say, are you ready for this? Can you scale this? Or, and does your strategy allow it? Right? Like if you're scalping on very small time frames and you're using a thin market, sometimes scaling someone with exponentially bigger size is not going to be the best avenue. Right. So it
Right.
really depends on the trader, the strategy, the markets that they're trading, and their statistics. But yes, endless upside is basically the answer. Yes.
Well, also as far as contracts go, will you allow them to trade more contracts as they grow their accounts into bigger sizes?
Yeah, 100%. We have risk infrastructure built in the actual technology that we use, and we also have margin risk built in. And what we also do is we don't cap your payouts in real prop.
Yeah.
So this is something I forgot to mention, and this is something I think is important, is that you can trade up to a 90-10 split, and we won't cap your payouts. You get paid out every month like a salary contractor or a subcontractor in the business because you're trading with the firm's capital at that point.
Yeah.
But at the end of the day, you have the ability you have unlimited upside at that point. I mean, there's no caps on your payouts. Yeah.
Nice. Okay. So what happens if a trader is in live prop, they have a bad week, a bad day, they tilt and they blow their account? What
They
happens?
can't blow their account. We have safeguards in place basically to protect that. Yeah. So what we've done, and this was something that was a part. So this is something that I hope other prop firms hear and that they actually listen to this, because I think it can help them as a company as well. And I'm not here to say that I'm any better than anybody else, or I'm just here to share my experience. And one of the things that we did was we worked really heavily with the technology providers that we use and also the brokers that we set up this infrastructure with. We spent months building the real prop infrastructure. And what that means is that unlike brokers, like if you go and open up an account with an FCM, they got like a 80% margin call limit. Like you could lose 80% of your money and then you won't even get a margin call.
Yeah.
Right. Well, I can't justify how that even makes sense for a prop firm. If a trader comes in with a big account and they lost 80% of that, like we'd be the idiots at that point. Right.
Yeah.
So the way this works is that we have built templates, risk templates that work with the broker. And how it operates is that a trader can't actually breach their drawdown limits in the accounts.
Okay.
So you have a drawdown limit in the live accounts just like you do in the actual Gladiator accounts. And if it gets tripped, you can't lose past a certain amount.
Okay. Cool.
Yeah.
That's
Yeah,
awesome.
it's very structured. So it's protecting the trader. We're also protecting us. Yeah.
Okay. Let's talk about the most important thing besides the rules is going to be your payout process. So I saw on your webinar as well, like so you basically you can get payout once you hit your trailing drawdown plus $100, which is
Yes.
very in the industry. 3 days per week, $100 minimum.
Mhm.
There's a cap, of course, and just gotta follow the rules. And if you submit a payout request between 1 a.m. on Saturday to
Mhm.
5 p.m. on Sunday,
Mhm.
it'll be reviewed on Monday to Thursday, and you'll get paid on Friday.
That's correct. So the way it works is obviously you have it has to kick in on the first week, right? Like the
Uh,
way it becomes weekly is that let's say this is your first week in the firm, right? Let's say you came in on a Monday and you traded all the way to a Friday and you qualified for a payout. On the Saturday, you can hit the payout request button. It'll go to the team. And then on Monday, we review all the payouts, right? The weekend is for requests because the markets are closed. So we do it on the weekend to keep it simple. And then on Monday, everybody reviews all the flags and reviews all the compliance and reviews, make sure. So technically, it really is the first transition is like 10 days because obviously you have to go through the first week of trading. you get that first week the next Friday. But what happens is every week from that, it's just a rolling effect every week after that. So if
I
you
got
just
it.
do that every Friday, it becomes weekly every Friday. Yeah.
Okay. And as far as if it's pending, can the traders still trade the accounts? Uh,
Yes.
okay. And if
Yes.
they if they lose if they go below they dip below with the request, it's gonna get denied, right? Obviously.
So and here's the thing, right? Like some firms will cap you at your drawdown. So let's say you make your drawdown and then anything above your trailing drawdown that's locked, right, is you're in territory of actually, being qualified for a payout. You can actually draw into the drawdown
Uh-huh.
because obviously that's your choice, but that's not going to be good for you if you're going to be trading moving forward, right? So it's one thing that we do differently and if a trader wants to draw out of the account and it eats away at some of their drawdown because they're eating into that, they only need to cover their trailing drawdown once, right? It's what makes us unique,
Yeah.
but that also forces a little bit more discipline onto the trader, right?
Right. But okay, but if the trader puts in a request and then they lose money to the point where the account balance no longer satisfies the payout.
They
So
would blow the account at that point. They would hit their drawdown at that point. Yeah.
okay, I got it. And as far as the payout review, is it a manual process? Do you have like a system in place where it's automatic?
Yeah, we have both actually. So we have a system and process. First of all, is to make sure that there's no flags on the account. Then what we do is we go over the flagging system, then we go over the appeal system, and then obviously we go into approval, right? So it's a systemized approach, very systemized approach. Yes.
Okay,
Yeah, it can't be just, oh, we'll do this today and oh, we'll do that tomorrow. No, when you're dealing with hundreds and thousands of traders every week, like you have to systemize it. Yes.
right. Okay. And you only need to hit the trend drawdown plus $100 one time, right?
Once. That's it's good and bad. Let me explain this.
Yeah,
The
I
good thing,
know.
the good thing is that it makes it easier for you to get through the first time.
Yeah.
But this is where some traders that are very emotional will draw into that, right? They'll take their payout and they'll draw into that, but now they have less drawdown, right? And you got to remember, like, once you do that, that's not working in your favor. I know there's a few other firms that restricted that because they had traders that were failing and they were blowing out their accounts because of that.
Yeah.
But at the end of the day, it's a trader's decision to make their own risk decisions. So we don't encourage it, but we're not going to stop you from it, right? And it really is for you to decide, do you really want to take a payout or do you want to build a bit of a buffer in your account?
Yeah. Right.
We
Okay.
would like to think that a trader should build a little bit of a buffer in their account so that they have a little bit of wiggle room to make decisions.
Yeah, exactly. And as far as the monthly potential goes, on a 50K, so one account, you could take a weekly withdrawal of 1250,
Mhm.
$1,250 times by four. That's 4 weeks in a month, $5,000. That's on one account, you got
That's
20.
it.
You can make 100K potentially if you do
Yeah.
well. So that's
Yeah.
awesome.
Yeah. And you keep throwing out 20, and I'll give you some data that most firms won't share with you right openly, but I will, is that we don't like the amount of traders that buy 20 accounts is less than you think.
Yeah,
So like we see, 5, 10, but once you get over 10 accounts, the numbers drop drastically.
yeah.
So when you really think, just because we do offer 20 doesn't mean a whole lot of traders do that.
That's
And
true. I didn't
that's
think
the
about that.
that's the reality of our space is because it's more expensive. Most traders don't really want to drop that much money on the accounts, and you get some pretty big players that have some big pockets. They will, and you've got some traders that are doing that. But the truth of the matter is that we see most of our traders, cap out at about 10 accounts or so. 10. So once you get into 15 and 20, I mean that's a smaller group of people. Yeah.
Okay. And again, as far as denial goes, if you're gonna get denied, you're gonna know ahead of time, right? Because you have
Yeah.
the system in place to know.
Yes. And we'll tell you at the end of day reports when we pull the system at the close into the Globex Open. So you'll know right after the Globex Open if you've been flagged or not and how you can appeal that. And it's really straightforward. Send an email in, deliver the deliverables, and our compliance team will contact you within 24 hours to communicate on it. And we've had traders lift their flags within 24 hours. And we've had traders that have flagged the system and actively are like, yeah, I know I broke the rules. I made a mistake. And we communicate with them. And, it's quite simple. Yeah.
Okay. Yeah, I think with the rules you have in place, I think even you offer, a lot of accounts, you have really good structure to be long-term sustainable.
Just
So
lots of experience, my friend. Years and years in the business of trading, man.
yeah, I can tell you put a lot of thought into this, and I'm really happy for that because, we as traders, we want firms like you guys who are going to have, these structures where we can follow correctly, get paid, move to
Mhm.
live with a big balance. and then just trade with you for a long time. We want to be partners with you, you know? So,
Yeah. I'm a big believer of like helping people because like you got to remember we come from the other side of the space for years, right? Education, software development, like we have big infrastructure that has been sending thousands and thousands of traders to many firms over the years. And it was the most logical course of action for us to build infrastructure for ourselves. But the other thing too is the TickBlaze side is like we work with many companies, right? Like you remember, like we own multiple companies, right? So
yeah,
Prop Shop is one organization, right?
yeah,
You know, then that's a different discussion.
yeah. Okay. One thing that we can also talk about is regulations. You being as experienced as you are, have you seen anything about incoming regulations into the prop space? Have you talked to anyone about it? Just share your thoughts.
So a couple thoughts on regulation is that I spent a lot of money with lawyers to learn as much as I could in the build out. Spent a ton of time with lawyers, regulatory counsel. We're quite open with the legal firms that represent us. They're on the website. We do have permission by some of the other counsel to mention who they are. We're not allowed to put them on the website because obviously they work and represent some pretty big, high-profile companies.
Yeah,
And so obviously the vision was is that if someone asks us, hey, who's your representation for regulatory and legal counsel? We've been given permission to provide that. If somebody wants to contact us, send us an email. We have no more. We're more than happy to send the links and show you who we work with. But the benefit to that is that they have people in these firms that have worked for the regulatory agencies and have big time counsel inside. And so what I can tell you is that I'm not a regulatory lawyer and I don't have a crystal ball. I know that they are actively looking at implementing, changes to the space. What that is, I don't know. I have opinions on it. I'd like to think that it has a lot to do with moving traders into live accounts, path to real prop, not just moving someone into small balances, right? That's something that we did differently. Maybe capping accounts, maybe forcing everybody to pay pro data fees. Who knows? But I'm very pro regulation in this space because I do believe that any company that is spending the amount of money and time that we have to build this type of an infrastructure
yeah,
should be here for a long period of time, right? And some firms deserve to be here. There's a lot of firms that have good people, good teams, a lot of really really good vision in their business, and they actually deserve to operate. And they shouldn't be shut down because of mistakes made by other companies,
right,
right? So I think that the industry does need a shake. The tree should be shaken quickly. Shake some of the bad apples out, make way for the right firms to be here, and it makes it a little bit more attainable for the business to be having a better name, right? Like I do think that regulation is not a negative thing; it actually imposes structure.
right. Okay, that's great. Let's talk about TickBlaze. I want your website, man. TickBlaze looks sick. I haven't tried it yet, but I'm gonna try it this week. I hear good reviews in my community about it. So talk about that. I know you guys, I think you bought it 2 years ago. Um,
Yes. Yeah,
so
so I'll just share a little bit of background. So I mostly spent most of my years in software development. I'm not a programmer. I'm a system architect. So what does that mean? I build systems. I build trading systems. We own Arc AI. So I don't know if you're familiar with Arc AI, but Arc AI is a software development company that we've got about 134 indicators and automated systems. Like that's a lot,
nice.
right? Like that's a very large infrastructure of software. We've built into pretty much every single platform in the world that has any size.
Yeah,
And we knew that we wanted to build our own technology and we were going to build our own platform, but the time to market and how long it would take and how much money that would cost is quite substantial. So what we decided to do was acquire a technology firm, and we put feelers out. We looked at many different companies. We looked at different development infrastructure, and we found TickBlaze. It was originally founded by Daniel Toshner, who was a senior engineer for Blackstone.
oh, nice.
And after a year of due diligence, we raised a Series A, and we ultimately acquired TickBlaze. And then what ended up happening now, TickBlaze was originally built for institutions. It wasn't really built for retail traders.
Huh.
But because of our experience on all the retail platforms, and because we had so much indicators and algos, and we had so many traders that work within our infrastructure and our community, we knew that in, a fairly good amount of time, and if we put a lot of money into the tech, we could build it to being a major contender. And so we did. We invested millions of our own infrastructure into the platform, spent millions of dollars evolving the technology, and we launched it last year at the Benzinga FinTech Awards. We won a lot of awards. We made some great connections, great partners. It's what's sexy about it is that it's a hybrid platform, and it's actually two platforms in one. It's a discretionary trading platform, and it's a quant platform. So a lot of automation exists in the tech. And so TickBlaze is not just a retail platform. It serves brokers, prop firms, quant hedge funds, and also retail.
Nice.
Yeah.
Yeah, I found it
Yeah.
great that like, if you trade with prop shop trader, you get access to TickBlaze, and that's awesome.
Yes. Yes. Absolutely.
Yeah, so I think people should
Yeah.
take advantage of that.
Well, and it's important to understand that PropShop and TickBlaze are two separate companies, two separate boards, two separate groups of investors, two
Yeah,
separate entities. We have a partnership between the two, and I'm the CEO of the NeuroStreet Group, which owns TickBlaze,
yeah,
and I'm also a partner on the PropShop side. Yeah.
yeah, yeah. I think there are other, web-based platforms that are white labels, but TickBlaze is you own it, right? So
Yeah, and that's what makes us quite unique is that there's a lot of technology out there that is basically, taking charting widgets or white labeling somebody else's tech, or
yeah,
they're reliant on other people's tech. We own it outright. And so what's unique about that is that that'd be like a MetaTrader owning FTMO or vice versa, right? Or that would be like an Apex owning NinjaTrader or a NinjaTrader owning Apex, right? Like
yeah,
our infrastructure is unique. Is that PropShop and TickBlaze is ours, right? And we're the first in the industry to be able to offer that. Yeah,
yeah. Yeah, people who trade a prop shop, when they have access to TickBlaze, they get a lot of free software, right? That costs normally a couple $1,000s, I believe.
thousands, yes, tons.
Yeah,
So we have TickBlaze is unique in that the whole point of PropShop was that we wanted to provide more than just prop. And what we did was we figured that with the TickBlaze side of it, we can provide the platform, we can provide access to the indicator. We have a marketplace, but we give thousands of dollars of software away for free, like tons and tons of indicators. Inside of the platform, there's a portfolio of over 14 algos that we give away for free. So you get 14 automated systems that you can literally just have. You normally have to spend thousands of dollars for this stuff, and we
nice.
just give it away because we have access to it and we have that to give. But what's unique about this is that we also have an open source community. So we actually looked at what TradingView did very successfully. And TradingView built their platform around an open source network, right? Where traders could post software and code and they can communicate. So we built that around the TickBlaze side so that when traders come in, they can upload indicators and source code, and developers can be in there and they can work with vendors. And so TickBlaze is an open source social network built around the tech.
Yeah,
So when traders come into the prop, you get access to all of that
yeah,
for free.
yeah. It's great. You get free software. I think you have a good community in there as well.
Yes.
So
Yes.
a community is really important because like I'm sure
Oh
like
yeah.
trading is a lonely journey, bro. No one in my real life circle of friends are traders, so they don't understand like the emotions I feel every day, you
Sure.
know? So if you have a community that can help you, that understands how it feels like, I think that's a great thing to do. So,
Yeah, and
so
what's unique is that I know a lot of people, hey, do you have a Discord? No, we don't have a Discord. We don't live in Discords. We don't believe in them. I believe in being able to provide better value than a Discord, because Discord can be dangerous. You get a lot of spammers, a lot of spam, and scam artists in there trying to pull traders in, and you see that a lot in the crypto space and stuff like this. So for us, it was really about having a community that could be moderated, could be controlled. It's regulated, it's narrated. I mean, there's compliance in there. We check to make sure everything is above board. I mean, it is a real community, but it's also like a social network in that you can communicate, you can get engagement. There's leaderboards, reward systems in there, so it's quite fun, and it is very dynamic for all the traders. Yeah, a
yeah,
lot of very successful traders in our community, and they're
yeah,
very, very willing to talk to a lot of people.
yeah, that's
Yeah,
great, dude.
yeah,
So before we close,
sure.
on your webinar also, I think you said that. So for you, number one important thing for you is your traders and payouts. Number two is support, right? Support staff is super crucial to any business, especially in this space. So I think your support staff, I've talked to a few already. They respond super fast. So kudos to that. shout out to your team. Is there anything you
Appreciate
want to
that.
talk about your support staff? I think,
Yeah, I mean, we doubled our support staff after launching because obviously we wanted to ensure that as we grow quickly, that also gets met with the proper servicing. I mean, I just go back to the foundation of basics in business, right? I mean, you if you're going to have a great business, it's as good as your team is to support your clients, right? And
yeah,
in our space, there's a lot of people that haven't really been treated that well, right? And I mean,
yeah,
you're dealing with payouts, you're dealing with rules and compliance. There's a lot of communication that needs to go on and understanding how to work with a prop firm and how to get the right guidance. And so we're really big on support. We're big on support training. We're big on support compliance because obviously how our support team communicates with our customers is extremely important.
yeah.
But I mean, at the end of the day, I do think that support is the backbone to any successful company, and it's at the forefront of our attention. Yes.
Yep, agreed. All right, man. Well, thanks for coming on, dude. This is great.
Yeah.
Very
Appreciate it.
informative. Yeah,
Yeah, and I appreciate you putting on these interviews for us founders like this. It's a great place for us to share our passion and our vision. And yeah, I'm glad to work with you and your group. And if there's anything that we can do to help your traders be great, let us know. We're here to help. Yeah.
for sure. Let's do another one in the future as your firm grows. I'm sure things will get
Yeah.
even better for you guys. You guys will blow up into space. I'm looking forward to seeing that and partying with you guys.
Yeah.
So again, thanks for coming on. See you
Appreciate
on the
it.
next one. And
Yeah.
thanks.
Thanks, everybody. Thanks for watching.